Welcome to the last part of the discussion on budgeting. So now we look at objective 5. We prepare financial budgets for a manufacturing company. So the financial budgets comprise of the cash and the capital expenditure budget. The cash budget estimates the expected receipts or the inflows of money and the payments outflows of cash or money for a period of time. So this is integrated with the various operating budgets. In addition, the capital expenditures budget, dividends, and equity for long-term debt financing plans for of the company affect the cash budget. So let's take a look at the illustration of a cash budget. So we look also at the elite accessories example. Sa sales, we have the budgeted sales for January to March, accounts receivable for January 1, the receipts from sales on account, from prior month's sales on account, 40, and from current month sales on account. So what does these percentages mean? Ibig sabihin lang po niyan, yung mga pinautang mo ay mababayaran on January, 40%, at yung mga pinautang mo ng January ay mababayaran na 60% on the month. From prior month sales on account, 40. Ibig sabihin, halimbawa, December, may pinautang ka noong December, 40% mababayaran on January. Pero kung may pinautang ka ng January, 60% ang mababayaran ngayon kasi yung 40 ay mababayaran pa on February. So, ganun. So, let's take a look at the cash budget. So, for January, the budgeted sales daw is 1,080,000. Okay. Dahil nga 40% will be paid on the succeeding month, yung 40% is 432 cash collected from prior month sales. Okay? So, doon siya mababayaran. Yung 1,240,000 ng February ay mababayaran 60% nun on the current month. So, that is 744,000. So, that would be the total receipts from sales on account on February is 1,176,000. So, let's take a look at our cash budget. So, January, February, March. Mhm. Okay, let's take a look yung note A. Kasi sa January, ang referral natin dyan. Okay, meron po tayong accounts receivable na naka-indicate dito on January 120Y1. So, 480,000 given as AR balance ng beginning January 1. You multiply it to 40%, tama ba? 400 cash collected, prior month's notes. No, hindi. Ang ibig sabihin lang nitong accounts receivable on January 1, 480,000. Ito yung 40% noong 40% ng accounts receivable nung December na makokolekta mo na siya on January. Kasi 'di ba dalawang partition lang naman ang kinapupuntahan ng accounts receivable. It's kapag may pinautang ka daw ngayon, 60% ay makokolekta mo ngayon at 40% ay makokolekta mo on the next month. So, dahil meron kang 480,000 dyan na beginning on January 1, ibig sabihin, ito yung 40% ng December. Tama? Yes. Tama. Dapat tama yan. So, 480,000, this will be fully collected on January. 480,000. Next. 1,080,000 kasi ito yung sales natin ng January, multiply to 40%, that is 432,000. Makokolekta po yan ng February. 1,240,000 times 40% is 496 kasi yan yung sales ng February na makokolekta natin ng March, yung 40. Okay, doon tayo ngayon sa 60. Kung kailan nabenta, doon daw makokolekta yung 60. 1,080,000 times 60% is 648. Kaya nga, nakolekta siya. Cash collected from current month sales. 744 for February and then 582 for March. So, total mo lang yan yung total receipts from sales on account for January, February, and March respectively. Okay? Okay. So, yan po yung schedule of collections from sales. This is Exhibit 17, the schedule of collections from sales. Paano naman kapag payment? Okay. Okay, the policy, okay, binigyan ka ng budgeted manufacturing cost, depreciation, accounts payable. So payments of manufacturing cost on account from prior month, 25%, from current month, 75%. So same logic lang din ang gagamitin natin when we prepare the schedule of payments. Kanina yung schedule of collections from sales, ngayon naman schedule of payments for manufacturing costs. So tingnan mo lang po yung note, 'di ba? Prior month's manufacturing cost is 25%. And then kapag current month, 75%. So same logic ang gagamitin mo diyan. Yung 190,000 kasi yaan yung beginning ng accounts payable mo, which is 25% of December, 'di ba? Kaya yan fully naka-indicate diyan 190. 204 naman yung para sa February, and then 189 yung para sa March. So bakit sir 840 minus 24,000? Saan po nanggaling yung 24,000? Because the 24,000 is the depreciation on machines included in manufacturing costs. So kasama dito sa 840, 780, and 812 yung depreciation. Eh yaan naman ay hindi mo naman yan kinokolekta. This is a non-cash item, yung depreciation. Kaya dapat ibawas mo yan. Okay. So ganun lang siya. So now we have, itotal mo lang po yan, then we get now the schedule, the total payments for January, February, and March under Exhibit 18, schedule of payments for manufacturing costs. Okay, now let's complete the cash budget. How do we complete this? So under the budget period, we look at the estimated cash receipts minus the cash payments, estimated cash payments. That would be your cash increase or decrease. Kasi kung negative yan, cash decrease yan. Kung mas malaki yung cash payments. Plus the cash balance at the beginning of the month, plus cash balance at the end of the month. No, no, no. Cash increase plus cash balance at the beginning of the month. That would be your cash balance at the end of the month. Dapat may underline yan. Less yung minimum cash balance, that would be your excess or your deficiency. Normally kasi may sineset dyan na minimum or the maintaining cash balance, hindi pwedeng bumaba doon yung balance kasi pwedeng maapektuhan yung operations mo kapag below ka doon sa particular cash balance. So that is a control. Kaya merong tinatawag tayong minimum cash balance o yung parang mga compensating balances. Okay, let's take a look at an example here. So, ito pong collections of accounts receivable. This is lifted from Exhibit 18, yung kinumpit natin. Then, meron po tayong interest revenue daw on March 24, 500. You just add it. Then, you deduct your estimated cash payments. Lifted from Exhibit 18 po itong data. Yung manufacturing cost, then binigyan ka ng additional information related to selling and admin, capital additions, interest expenses, income taxes. So kung saang period po siya in-identify sa problem na ibawas, doon mo lang siya ibawas. So the total cash payments now, so eto na siya. Ibawas mo ngayon yung total cash payments from your total cash receipts, kung positive, cash increase, kung negative, cash decrease. So, ang formula is cash receipts minus cash payments. Okay? 143.34. Okay, nag-negative tayo or cash decrease tayo on February. Cash balance at the beginning of the month, i-plot mo dyan. This would be your cash balance at the beginning of the month. Okay, less the minimum cash balance. Alis itong plus. I think this is erroneous. Wala dapat itong plus na ito. Because cash increase plus cash balance at the beginning, that would be your cash balance at the end of the month. Wala itong plus na to. Then ibawas mo yung minimum cash balance. This will be your excess or your deficiency.
Ang sabi according to this, Exhibit 19 indicates that the company expects a cash excess at the end of January of 28,500. This excess could be invested in temporary income producing securities. In contrast, meron kang cash deficiency on February that might require to borrow cash from its bank. So, kailangan nating ma-identify itong budget requirements kasi makikita natin yung excess or deficiencies on our cash. Kung sobrang malaki yung ating excess, tingnan natin yung policy natin on that. Kasi pwedeng alisin mo yan dyan sa iyong operations at ilagay mo sa productive pursuits or mga high yielding investments. At kung naka-negative naman yan, dapat that is an indication na dapat mangutang ka or kailangan ng outside yung money from the outside na or pwedeng mangutang, pwedeng magbigay ng additional capital yung may-ari because that will hamper the operations. So yun yung mga indications under the cash budget. So this is another example. I think that we have to proceed with the capital expenditures budget. So under the capital expenditures budget, it summarizes plans for acquiring fixed assets. Such expenditures are necessary as machinery and other fixed assets wear out or become obsolete. So, 'di ba, merong useful life ang bawat fixed asset. So, it is by looking at our uh, lapsing of our PPE, yung ating property, plant, and equipment, we know na merong mga asset diyan na nagwe-wear out, nagiging obsolete na puwedeng mas malaki ang nagiging cost natin kesa sa ating benefit. So, dapat i-plan din natin at tingnan natin kung ah, kailan ba dapat natin palitan itong mga items na ito at what budget do we need for these types of item. To illustrate, we have a 5-year capital expenditures budget for Elite, which is shown in Exhibit 20. So, machinery ng cutting department, machinery ng sewing department. So, ina-identify. This should be supported by schedules din yan. As shown in Exhibit 20, the capital expenditures budgets are often prepared for 5 to 10 years into the future. This is necessary because fixed asset often must be ordered years in advance. Kasi nga, especially when these are yung mga malalaking items of machinery, dapat yan ay in-order in advance. So, dapat pinaplano mong mabuti yan. Hindi pwedeng masisira na siya next month ay ngayon ka palang nagpa-plan. Okay? So, kaya mahaba yung projections natin dyan. Normally yan ay 5 to 10 years into the future. I-identify mo lang naman yung costing requirements para dyan. And then, you will use this once okay ka na sa capital expenditure and cash budget, you will use it in projecting your balance sheet. The budgeted balance sheet, sometimes called the pro forma, is prepared based on the operating and financial budgets of the master budget. The budgeted BS is dated as of the end of the budget period and is similar to a normal balance sheet except that the estimated amounts are used. For this reason, a budgeted balance sheet for Elite is not illustrated. Okay, hindi na nag-illustrate ng budgeted balance sheet because this is essentially the same as a normal balance sheet except that uh, naka-budget yung mga amounts na naka-indicate doon. So, ang mahalagang ma-identify natin dito is yung cash na kinumpute mo kanina, yun dapat ang magiging cash budget, yung amount ng cash mo doon. At yung capital expenditure, dapat iyan ang magiging item mo for your PPE. The rest, yung mga receivable, it would be estimated based on company policy. At normally yan sa problem, i-indicate ko anong mga classification, anong estimation for that particular account titles. Ang mahalaga, under the budgeted balance sheet is the cash and the capital expenditure budget. I think that would be the end of the discussion under this chapter. For this book, chapter 8 siya, under budgeting. Okay.
Thank you. The components of the budget this budget topic comprise of the operating and the financial budgets, as we already have discussed, and this is important as we give scientific and processed information to management reports, as we aid them as management accountants, kasi mahalaga yung information related to the budgeted reports for them to make decisions related to acquisitions, to investments, to operations. Mahalaga itong mga budgeted reports na ipinapakita natin sa kanila, as this ito ay isa kaya ito yung inuna dito sa topic on management reporting, dahil ito talaga yung hinihingi in practice, uh, yung preparation natin ng budget for the entire organization. Okay, so that ends the discussion on budgeting. Thank you.